Hello and welcome to another acysecurities video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Today's video, the 2020 roller coaster wrap, is all about what's gone on in 2020 and what some of the biggest impacts I have seen so far have been. Of course, it has been emotional for the humans, investors, and probably much of the animal kingdom as well. But regardless of that, 2020, we're coming to a close and we're going to be glad to get rid of you. So, moving on, and without further ado, the first part of this is looking at what some of the news releases are throughout the year. We have seen a lot of different things happening, a lot of different events, but this chart behind me I've got up is the Dow Jones. And I've pointed out as much of the US news that's come out throughout this year to try and give you a bit of an idea of just how much has gone on. Now, if I'd really put everything on this chart, it wouldn't be legible. You wouldn't be able to read any of the ink on the page. But of course, it all started with bushfires in Australia and it's wrapping up towards the end of the year with what looks to be some form of a Brexit negotiation and potentially a vaccine deployment starting to happen. So lots and lots to cover without so much time to do it in. So in that case, I'm not going to be covering absolutely everything. But bear in mind, there has been a lot of stimulus, which you're all knowing about. And you can see just at the bottom of this chart where it has kicked off. Now, moving on, the most obvious one of the lot is going to be coronavirus. It has impacted the globe. It has hit financial markets very, very hard, as via this chart you can see right here. At the very bottom of this chart, this has got the S&P 500, the Dow Jones, and the NASDAQ all in one place. And you can see at the very bottom of the chart where we're seeing the bottom of price, that is where we saw the stimulus packages really start to get kicked in. That is when we got told that there was no limit to quantitative easing by the Fed. Now, really, this year has actually recovered quite well. We've actually gotten back up to our long-running average of about 11 to 12% over the entire year in growth. And that's coming from the highs that we saw in February. But of course, there's still so much more we don't know about coronavirus or where it's going to go next. The lockdowns have impacted markets all across the globe. And of course, the economies are all across the globe. So there is a lot to unpack with it all, and we could make a separate video all about that. But I am going to move on. The next thing that we're looking at here is negative oil prices. This was an unprecedented event. I know futures traders who have been trading the market for more than a couple of decades, and they have never seen negative prices on oil. So when it all did finally blow out of proportion back in May, it was something to behold and that we had never really seen before. Now, the long-running thing that was behind the scenes here and what actually happened, the futures contract for June and November stayed pretty stable. They saw prices still positive. But for May, we had a couple of hiccups along the way that contributed to it. The first thing was there were OPEC members having a bit of a disagreement. Whenever they have a bit of a disagreement, they tend to decide to flood the market with oil to try and bring those other OPEC members back into line by hitting them where it hurts in the back pocket or the wallet. In this case, it didn't really work. It was kind of like the worst time on the planet that you could actually flood the market with oil. Right as the pandemic kicked off, right as lockdowns kicked off, right as air travel was reduced or restricted, and of course, people weren't wanting to go to work. People started working from home, which caused a huge amount of problems for the demand. The need for oil was just next to zero, which is why we saw at the worst point in time of this minus $37 a barrel of oil. The barrel was worth more than the oil. And if I had the oil and you were wanting to take it off my hands, I'd have to pay you to take it off me by $37 for every single barrel. So a lot of futures traders were caught out on this. They have run into problems, and I'm sure many of them would still be feeling it today. Now, the next one is obviously the tech side of things and working from home. This has all been led by the working from home side of things, driven by the instigator being the pandemic. Now, tech stocks have done high-flying stuff this year. They have really performed. They have filled a gap where we weren't able to get to work, but they gave us a way of still working from home. Elements like Zoom, Amazon, those retail-based outlets like Shopify, all gave us a new way to purchase goods, to do our business, to obviously work and be able to make a living for ourselves. So we saw a lot of innovative tech coming out. We saw a lot of innovations in new products that would help the work from home generation, or at least the people that are working from home. And of course, all of those essential workers, it kind of helped support where we were going next. It had stopped people from going out, enabled them to work from home without needing to leave the house and spread the virus further. So there's been this side of things, and this has been a major impact. But I think the trend is likely to continue. Now that people have actually worked from home and been able to do it successfully, there will likely be some continuation of this style of work for some time to come. And let's not forget that in 2019, the tech industry was already starting to go on the up and up. We were seeing new innovations, new technology, and I don't expect that trend to go anywhere anytime soon. Of course, we'd like to get back to the real world and real life, but if that's going to be, time will tell on that front. Either way, tech will continue. We are obviously moving into a technological era and have been in one for some time, and that is just going to continue to grow. Now, moving on, the next one was the presidential election. Throughout the entire year, there was a lot of politics happening, especially out of the US. Now, this is probably the first presidency where I've gotten 90% of my information on the sentiment of the market from Twitter. But regardless of that factor alone, we saw a huge amount of influx on the markets themselves. We saw things swinging pretty wildly. People were emotionally being driven. You'd hear information on one side, and this all related to stimulus as well and what was going on in Congress. We've had trouble trying to get a stimulus package across the line, which we've only just managed to get at the very, very end of 2020 with nearly less than a week to go till Christmas. So all of this has sort of contributed to some of the turmoil we have seen in the markets. Naturally, the back and forth behavior of stimulus has pushed the US dollar currency right down and then right up and back and forth. We've also seen stock markets kind of taper off and flatten out because they haven't got more funding coming in. In addition to all of that, we've also been having to live with the idea of a contested election, which has made things rather challenging for people to invest in, but also made it quite difficult to really consider the implications of where things might go. So instead, what did we do? We looked at how each presidency might be running. We already knew what it would look like under a new one with Trump, but we still had to analyze what it might look like under a Biden administration. Now, moving on from the presidency, we also looked at vaccines. Vaccines at the very beginning of the year with Moderna Incorporated jumped more than 80% because it was right as the pandemic kicked off. It was only about a month into the pandemic where lockdowns were still all over the world, and we got this news and everyone reacted very, very positively. They went, oh, a vaccine might be coming, this will be over very soon, but the sample size was too small to accurately say, yes, the pandemic's going to be over. And that ended up seeing a big fall in Moderna stock prices and the health stuff, and then we ended up moving back into tech again. And this constant idea of changing of where money is sitting has really been going from tech to cyclicals to value, back to tech, and it keeps on cycling around and around. Obviously, favoring those things, a vaccine means that it would enable us to look at some of the older sort of economy stocks rather than the ones that are on the growth spectrum. Now, unfortunately, we still don't have a vaccine in wide distribution, but we do have a couple of vaccines that should be able to help us get there. Now, really, I think 2021 is going to see us looking for a lot of those vaccines and seeing how they roll out, how the supply of them goes, how it actually gets out to all the people, and how quickly we can get back to the real world, or what we used to call the everyday. Now, moving on from that, the next piece has been Brexit. Brexit has been a massive contender throughout the year. Initially, we saw the UK leave the EU, and then all of this year it's been a negotiation about how trade is going to look between the two nations. And we are coming very, very, very close. We're almost at the new year. We're just a little bit before Christmas at the time of recording this video, and it has been a mess indeed. We've had the same sort of issues with politics that we saw out of the US with Brexit. One day you get positive news that says, yep, we are going to have a deal. The next day, negotiations collapse. And then it keeps rinse and repeat over and over. And it feels like it's been like that way for much longer than 2020. But this year it's been even more important because the deadline is rolling up. So there is still plenty of scope for there to be some form of agreement, but we still feel like it is a very long way away. Until we find out the exact details, this is likely going to be the one thing that we close out the year with. Unless, of course, there's a new virus that comes on that I don't know about. But hopefully that's not the case. Now, realistically, this is most of the stuff I had to cover today. These are all the big events that have really gone on. And I am hoping that it has helped you guys in case you have missed something that has gone on. But of course, don't forget to check things out. If you need to, go back and check out my Dow Jones chart at the very beginning of this video and see what some of the things are that have caused impact to the entire world. Now, if you do have any questions from today's stuff or any of my other videos, feel free to get in contact with me via talktoal@acy.com. And don't forget to like and subscribe this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.